Hello, crypto investors. Whether you're a seasoned trader or just starting out, you know the crypto world has always moved at lightning speed. If you've ever felt like crypto investing was a game with no rulebook, you weren't wrong. For years, the landscape was filled with uncertainty, and every new headline brought more questions than answers. The US government's regulation by enforcement approach left everyone guessing and anxious. Investors, companies, and even regulators themselves struggled to keep up with the shifting sands. But 2025 changed everything. The Trump administration made a dramatic pivot, the DOJ disbanded its crypto task force, and the SEC dropped major lawsuits that had cast a shadow over the industry. Suddenly, the government realized that with over a quarter of American adults holding crypto, it was time for real, comprehensive rules that everyone could understand and follow. Now, instead of chaos, we have clear legislation, guardrails that make the market safer, more predictable, and more welcoming for new investors and institutions alike. These new laws define what's what, protect consumers, and open new investment doors. They also encourage innovation while setting boundaries to prevent abuse. The days of fearing a single regulator's tweet are fading. Investors can finally breathe a little easier, knowing the rules of the game are clear. The rules are complex, but understanding them is crucial for your financial future. Staying informed will help you make smarter, safer decisions in this new era. So buckle up. Let's dive into America's new crypto era, where opportunity and clarity finally go hand in hand. Politicians love acronyms, and in 2025, they outdid themselves with a trio that's reshaping the crypto landscape. This year, three headline-grabbing acts, Genius, Clarity, and the CBDC Anti-Surveillance State Act, dominated the conversation, each targeting a different pain point in the industry. The Genius Act finally sets strict federal rules for stablecoins, requiring real, verifiable reserves and mandatory monthly audits. No more mystery assets or vague promises. Every stablecoin must prove it's backed by something tangible, and regulators are watching closely. Meanwhile, the Clarity Act, which sailed through the House, ends the endless SEC versus CFTC turf war. It draws a bright line. Bitcoin and Ethereum are now officially under the CFTC's watch, while security-like tokens remain with the SEC. This long-awaited clarity means less confusion and fewer regulatory surprises. For projects and investors, this means fewer surprise lawsuits, more certainty, and a safer environment to innovate and invest. The rules of the game are finally on the table. The CBDC Anti-Surveillance State Act takes a bold stand on privacy, blocking any government-run digital dollar unless Congress gives explicit approval. This law is a direct response to widespread fears about surveillance and loss of financial privacy. Together, these laws send a powerful message. The U.S. welcomes regulated private innovation but draws a hard line against government overreach and surveillance. It's not a perfect system yet, and the Senate still needs to weigh in, but for the first time, the U.S. crypto industry has a real, actionable map to follow. The framework is clear. Stablecoins are regulated with transparency, crypto commodities are defined and overseen, and privacy is explicitly protected by law. America is choosing to champion private sector innovation, but with strong guardrails to protect consumers and the market. For the crypto world, that's nothing short of a game changer. With new rules, Wall Street and Main Street are finally meeting in the middle. The SEC now allows spot crypto ETFs, so you can buy Bitcoin like a stock. No more confusing exchanges or lost passwords. Crypto is coming to 401ks too, thanks to a 2025 executive order, giving you more control over your retirement portfolio. Major banks, greenlit by regulators, are offering crypto custody and even planning their own digital assets. The Genius Act stablecoin rules give banks the confidence to join in. All this means easier, safer access for millions of Americans. Crypto is no longer a niche. It's a mainstream asset class. For new investors, there's never been a better time to get started. The US government isn't just regulating crypto, it's stockpiling it. By April 2025, the feds became the world's largest state holder of Bitcoin, mostly from criminal seizures. In March, they centralized these holdings into the US Strategic Bitcoin Reserve, treating Bitcoin as a national asset. Then, in September, they announced plans to buy up to 1 million more BTC over 5 years. This is a seismic shift. The government is now a major market participant, not just a regulator. Why? It's a hedge, a strategic asset, and a signal that crypto is here to stay. For investors, this is powerful validation. The US is officially long Bitcoin. That's a tailwind for the whole market. Taxes. The one thing as certain as crypto volatility. The IRS still treats crypto as property, so every sale, trade, or purchase is a taxable event. Hold less than a year, short-term gains, taxed as income. Hold longer, lower long-term capital gains rates. Mining, staking, or earning crypto. That's ordinary income, taxed at market value when received. The SEC clarified that liquid staking isn't a securities offering, but the IRS still wants its cut. NFTs can be taxed as collectibles, sometimes at higher rates, so keep records and get advice. The new laws make investing easier, but taxes remain a headache. Track everything. The IRS is watching. America's crypto overhaul isn't happening in isolation. It's a global race, a high-stakes game where every move counts. The EU's MiCA and the UK's new rules set the pace, but the US is back in the lead with the Genius Act and its G20 chairmanship in 2026, positioning itself as a key player. The US model-regulated private stablecoins and no retail CBDC, prioritizing privacy and innovation, aiming to balance control and freedom. China's model, a state-run digital yuan with full government oversight, emphasizing control and surveillance. This sets up a global clash, private competition versus state control, a battle of ideologies. At home, states are experimenting too. New York eyes new crypto taxes, aiming to regulate and benefit from the booming market. Florida invests state funds in digital assets, betting on the future of finance, and Pennsylvania debates bans for officials, reflecting the diverse approaches within the US. Where you live still matters for your crypto rights, as state laws vary widely. The US is shaping global standards, but the patchwork remains, creating a complex landscape. The world is watching America's next move. The chessboard is set, and the game is far from over. So, is it easier to be a crypto investor in America now? Absolutely. Regulatory clarity means safer stablecoins, mainstream ETFs, and even crypto in your 401k. The government's embrace of Bitcoin gives the market new confidence, but risks remain. Volatility, complex taxes, and a patchwork of state laws. Crypto is more accessible but not risk-free. Watch for Senate action on key bills, bank adoption of new products, and ongoing IRS guidance. The Wild West days are over. Now it's about smart, informed investing. The new normal is here. More structure, more opportunity, but more responsibility. Welcome to the future of American crypto.